Hi grade 12s, welcome back to another one of our video lessons. So today we're going to continue on page 219. We're going to look at tax deductions tables and IRP5 forms and fringe benefits. Okay, and you guys are going to do exercise 4 and 5 for homework. Alright, cool. Let's start then on page 219. I'm going to read to you what these things are, and then we're going to get into the worked example. I'll show you how to do this, and then you're going to practice in the next exercise. So the purpose of SARS tax deduction tables is to help employers to determine the amount of employees' tax to be deducted from salaries or wages. Okay guys, remember when you are working, the employer doesn't pay you the full salary and then it's your responsibility to pay the tax. The employer needs to pay tax on your behalf because, well, the government probably doesn't trust you to go and pay your tax yourself, so they force the employer to do it on your behalf most of the time. All right, so basically the employer needs to know how much tax to deduct from your gross salary. Okay. An extract of these prescribed tax deduction tables can be found on pages 379 to 383 of this book. The worked example which follows shows you how to use the tax deduction tables. An employer issues an IRP5 form to each employee. This form is used as proof the amount of tax that the employer deducted from the employee's earnings in the previous tax year. It is therefore a record of gross income. This will include salary and fringe benefits, non-taxable deductions in the form of benefits, for example, car allowances, and taxable deductions, for example, medical aid, pension, and UIF. The table in the worked example below is similar to an IRP5 form. The difference is that the table contains monthly amounts, whereas an IRP5 states annual amounts. Alright guys, so when you submit any documents to SARS, they always want to know in annual terms. So how much income was it per year? How much medical aid you paid per year? What was your interest paid to the bank per year? And they do yearly calculations. So when you go to do your tax, you need to have all those figures ready. You can't come there and be like, I need to do this and let me find this piece of paper and work it out for you. No, you need to come there with a summary of all your figures already done, and then you just tell them this is what it is and give them the relevant documentation. Alright, the worked example shows how to calculate this tax using the rates of tax table on page 217, okay, and the tax deduction tables on pages 380 and 383. The tax deduction tables give the amount of tax payable after the relevant rate of tax, and the relevant rebates have been applied to the annual taxable income. They do not include the medical scheme tax credit. Okay, so when we're going to do this worked example, we're going to look at how much he's earning per month. We're going to go to these tables and find the annual figure and see how much tax he's supposed to be paying on that. Then we're going to deduct the medical aid scheme and other things that get deducted according to A, B, and C, and we'll see what happens. And then if we convert this table to annual terms, it will look very similar to an IRP5 form, okay, because it lists almost the same values, but in annual terms. All right, so let's start with the worked example to page 219. So Janita, who is under 63 years old, works for the Happy Pet Shop. She earns 12,500 per month. She is determined to make adequate provisions for her retirement by contributing 400 Rand to a pension fund and 225 to a retirement annuity. Janita also pays 418 to a registered medical scheme. Use the rate of tax table on page 217 and the tax deduction tables on pages 380 to 383 to answer the following questions. What are the values of A, B, and C in the table above or below? All right, so let's look at this table. Let's see what they're giving us. So they say her monthly income is 12,500. Okay, guys, I want you to open your books if you don't have them with you on page 219, and I want you to look at the worked example and follow me with the figures that I'm talking about. Okay, don't just sit there listening to me because it's not going to make any sense. You've got to look at it. You've got to go to the relevant pages and actually look at these things. All right, cool. So monthly income is 12,500, less allowable pension fund contribution. Okay, they told us that she contributes 400 Rand to her pension fund. Okay, also she contributes a retirement annuity fund contribution, which is 225. So her monthly income is 12,500. We subtract these things from her gross income, meaning that we haven't taken tax on that figure yet. So the reason for that is that the government, remember, it makes provisions that you can contribute to a pension fund and medical aid, and that will be non-tax deductible. Okay. Okay, from the previous example. So we subtract those two and we get balance of remuneration or taxable income, which is 11,875. So now this is the figure that we need to apply the tax brackets and the amounts to and figure out what is the amount for her to pay in tax. So if you look at the next line, it says employer's tax on balance of remuneration according to monthly tax tables. All right, so here you need to look out for, are we talking about weekly wages, monthly, or annual? Because when you go back to page 380 to 383, they give you different sets of tables. Okay, so that's what we got to figure out. So obviously they're talking about monthly. So let's go to page. Okay, so go to page 380, 381. So it gives them monthly tax deduction table. So it gives you remuneration. So we're going to match her remuneration with what she's earning, which is 11,875. So let's find that 11,875. Okay, so it's basically the 15th line from the top on page 380. That is her weekly or monthly remuneration. If we go across one line, we see annual equivalent, which is 142,536. Now it tells you how much tax she's going to be paying on that amount. Now remember, they told us that she is under 63 years old. So we look at under 65 and we see the amount of 1,185 Rand, 1185. Okay, so if we go back, right, so that amount A would be 1,185. Then it says less medical scheme tax credit. Okay, so this amount B is not what she's paying for medical aid. Okay, she's paying for medical aid 480 Rand, but the government will only allow her a credit of 230 Rand. If we go to the previous tables, you'll see that medical scheme tax credit for taxpayers under 65 for taxpayer 230 Rand. So that amount is now going to be subtracted from the tax that she's supposed to pay. So amount C is now going to be your employer's tax on balance of remuneration, which we found to be 1,185, minus the 230 Rand, which is the value of B, which will give us value C, amount of tax to be deducted. Okay, so that amount C is what she's going to see on her payslip that is being paid to the government on her behalf by the employer. All right. Okay, so that was number one in the worked example. Let's look at number two. What is Janita's net income? Okay, so the net income is your gross income of what you're making minus everything that gets deducted. So we just found out what gets deducted, which is value C, and her monthly gross income is 12,500. So if we look on the next page, they did the calculation for us, and it is net income equals taxable income, tax to be deducted, which is 11,875 minus 955. Okay, remember it's taxable income, not her gross income, because she's paid her medical, not medical aid, her pension contribution and the retirement annuity. All right, so it's 11,875 minus 995, which is the tax, and she ends up getting 10,920 Rand. Okay. Then number 3 says create a sample of an annual IRP5 from Gr12's records. Now remember, your IRP5 sample they're talking about is a table like this, like we've just done in number 1, but with annual amounts. So all the amounts that you see, you need to now work in annual terms. So when you go to monthly income, you need to now look at annual income, okay? Or alternatively, a quicker method would be just multiply all the figures you see there by 12. If we go from monthly to annual, it's times 12. All right, so that's pretty much what they do in number 3 in the worked example. Now guys, exercise 4 is pretty much exactly like the worked examples we've done. So it just gives you different numbers. You need to go look and follow this example we did now, and you'll be fine with exercise 4. All right, guys, let's look at fringe benefits. So when an employee receives fringe benefits, the gross income includes the salary and fringe benefits. So instead of now this person that we looked at previously, Janita, she was just getting her monthly income, you can get monthly income plus maybe overtime, plus fringe benefits, plus something else, depending what company you're working for and what benefits they offer. Okay. So travel allowance is an example of a fringe benefit. In this case, if the employee uses his or her car for work purposes and more than 80% of the distance traveled per month is work related, such as going to see clients, then 20% of the amount of the travel allowance amount will be included in the gross income as a fringe benefit. Okay. So employees get a travel allowance already to pay for the petrol and see their, see their clients. But now, as a fringe benefit for using your own car and using it mostly for work-related purposes, you get an additional income of 20% of that travel allowance that you get from your company. All right, so let's look at the worked example. So Lunge is a product representative for a bank. He earns a basic monthly salary of 20,000 Rand. He receives a travel allowance of 10,000 Rand per month, and 85% of the kilometers he traveled were for work purposes. He receives other fringe benefits with a combined value of 2,150. Okay, number 1, calculate the amount of the travel allowance which will be included in his gross income. Now remember, in the above little paragraph, it said if you travel more than 80%, then 20% of the allowance will be added to your income. Here they're telling us that he's traveling 85% of the kilometers. So that doesn't mean that he'll get 15% to make the 100. Okay, that's not the connection. The paragraph said if he travels more than 80, whatever that amount is, it could be 90, it could be 100, he will get 20% of the travel allowance as his fringe benefit. So we're going to take his 10,000 Rand per month travel allowance, multiply by 20%, and he gets 2,000 Rand, which will be included as a fringe benefit in his gross income on his payslip. Number 2, calculate his gross annual income. Okay, so annual income times 12, or monthly times 12, which is annual. So what is his basic income? They said he earns a salary, which is 20,000 Rand. So 20,000 times 12 gives us 240,000. Fringe benefit for travel allowance, okay, that's what we just worked out in the previous example. So that is 2,000 Rand times 12, which is extra 24,000, plus the other fringe benefits that he gets to the value of 2,150, which will amount to 25,800. So his gross annual income is all of those three figures added together, which will give us 289,800. Okay. Now for number 3, calculate the maximum Lunga can contribute to a pension fund to receive tax benefits. Okay, so the contribution to a pension fund is related to the amount of gross income that you are making, because you contribute a percentage of your gross income. Okay, so the gross income we have already just calculated, which is 289,800. We're going to take that amount and multiply it by 7.5%, okay, or 0.075, which means that he can contribute 21,735 Rand. So he contributes that amount because it is greater than 1,750 per month. All right, this 1,750 per month is in the Did You Know bubble on page 221. I'll read it for you. The pension fund deduction is limited to either 1,750 per annum or 75% of the gross income, whichever is greater. Okay, so they give you an option of what is the maximum that you can contribute from your gross income to your pension, so that you don't get taxed on that amount. Do you see what's happening there? Because remember, from the previous example, we deducted the pension fund contributions. So what they're saying here is that he gets to contribute 21,735 because that is 7.5% of his gross income. If he was making a lot less income and that amount amounted to, let's say, 1,000 Rand only, then he could contribute 1,750, because that's what they're telling us. It's either 1,750 or 75% of gross income, whichever one is larger. Why do they want a larger amount than a smaller amount? Well, it's the same idea as the medical aid, right? So if, let's say, you are contributing to a pension fund yourself from your gross income, you are looking after your retirement in a sense, right? So the people that are not contributing to the pension, let's say they end up losing their job or they get old and they can't work anymore, they're going to have to get a pension from the government. Okay, so essentially the government has to sustain them. So the government rather says, listen, we'll allow you to pay your own pension and we'll give you a tax break so that you look after your own old age and you don't burden us with your problems when you're now getting old and you don't have any money and now whatever. Okay, so that's the idea of what's happening here. So they want to encourage people to pay their own medical aid contributions and pension, and as a reward they want to give you a tax break on those amounts. Okay, all right guys, so that was the worked example. Exercise 5 is again very similar to the worked example we just did. So please do exercise 4 and 5 for homework, and we're going to do unit 2 exchange rates tomorrow. Okay. Guys, also please bring your homework on Monday when I see you. I want to check that everything is actually done. Okay, cool. Thanks guys. I'll see you tomorrow.